the team.
All right. Well, now we are live.
Yes,
So
yes,
I'm
we
here
are.
with Smita, Clara, and Asha, and we are here to talk a little bit about VC and its potential impact on the greater good. Smita, could you, and then Clara, and then Asha, could you briefly introduce yourself? Tell us what you do, and then we'll jump into conversation.
Sure. So my name is Smita, and I work in Washington, D.C., currently at this company called Enduring Hydro. It's a private equity firm which essentially invests in renewable energy infrastructure.
And we are here to
I'm investing in the hydropower space. So what we do is we're trying to bring in private sector capital, capital from pension funds, endowments, essentially just pure private sector investments through LPs and get them to invest in this renewable energy infrastructure. So my role within the team is on the sourcing side, trying to get deals through our pipeline and some of the modeling as well. But looking forward, very interested in talking about impact metrics and how we can communicate that to our investors.
Great, thanks, Smitha. So, Clara, I'd love to hear more about what you are doing and what you are up to in Nairobi. Go ahead, Clara.
Oh, Clara, I think you're on mute.
Clara, I think somehow your feed has gotten muted. Oops. While we wait for Clara, Asha, could you tell us a little bit more?
Sure. So my name is Asha. I work at Ashoka here in Washington, D.C.
Oh, Clara, I think you're on mute.
And I also advise social entrepreneurs through Echoing Green. I'm on their social investment council. And I sit on a tech startup advisory board. So I've seen how VC funding works in the private sector, and I see impact investing on the Ashoka and Echoing Green side. And I used to work for the Bill and Melinda Gates Foundation. So I saw philanthropy through a foundation and how it works with, $2.5 billion a year going out into the U.S. and global health and development. I also advise social entrepreneurs through Echoing Green. I'm on their social.
Well, and I see what you're up to there in DC. We've got a great group with you and with Smithus, this great sort of impact investing perspective. Clara, can you hear us now? So one of the things that we had all wanted to talk about a little bit was the structure of VC and how things operate on a venture side, and maybe how we can tweak those structures or aim those structures at measuring things that relate more to impact.
Elizabeth, would you like to introduce yourself?
Yes, happy to. So I'm Lizzie Hazeltine. I'm here in Durham, North Carolina, and I am part of a 3-person venture fund here that focuses on doing seed stage investing in startup software companies. We're called Startup Factory. We've made about 31 investments, and we're getting ready to onboard our 7th class. Since we are a fund, we do have to make a return to our limited partners. But we do see ourselves as part of the larger startup community and playing an important role in helping entrepreneurs get access to capital to do the things they want to do. So I come at this from more of a purely profit-driven and return-driven investing background, but I also have experience in higher ed and ed tech and journalism, and have sort of a do-gooder background in general too. So I know we were having some tech issues with the recording, but we'll keep going for a few more minutes, and hopefully this will straighten itself out. So let's see. So we talked a little bit about who we are, what we're up to. Now, I wanted to talk a little bit about VC and PE structure, but I think we can probably send people to Investopedia or other places to learn more about that and talk more about what the three of us wanted to talk about specifically, Clara, what you brought up about metrics and measuring different sorts of things as success. And Smitha, you talked too about infrastructure and running and getting things up to speed as being part of what PE and VC investors do for companies. So let's move on to that. Clara?
I figured it out. Can you hear me now?
I can hear you just fine.
Fantastic. So my issue was, or my question was, does VC and do PE funds look at the impact that their investment has? So if you're investing in a business, say a business in Africa, and one of the things that you want to do is increase the number of jobs there, are you looking at the quality of the jobs versus, or are you just looking at the number of jobs? Because I see that with labor being as cheap as it is here and as easy to find here, especially when it's not specialized, workers do get taken advantage of, and that's one of the metrics I wish more people looked at, which is how much people are getting paid. Is it a quality job? What's the business's retention rate? And now that is what I consider to be impact, not just creating a job, but creating quality jobs that people can earn livings from.
It's an excellent point. They're one of the selling points of our area in terms of starting a business here or moving your business here is that there is a lower burn rate versus DC or New York. Your rent's cheaper, food's cheaper, but you still have access to capital and other things that might be a net benefit to a startup so that they could pay what is really a living wage. Smitha and Asha, can you speak to what you've seen in terms of more sustainable jobs that you've seen created by companies that you work with?
Sure. So I think there's also this sense of just a negative connotation when it comes to private equity. People are thinking of companies that come into local communities and shut down big plants and that trying to downsize and bring up their returns to of the project. And I think that is a model of the past, hopefully, but I think with my company and during Hydro, the whole point of it is that we're not just building clean energy infrastructure, but we're also providing opportunities for local communities by giving jobs through the construction and the operations of the plants and even the maintenance of it. So that's a big selling point that we have, not just to local communities when we're looking to build up a hydropower plant on an existing dam, but also the way we pitch it to investors and local banks in the areas. And so Clara, I mean, I don't have the answers on quality versus quantity. That is exactly what I want to learn from this group and the teammates group generally on how we can be, as a company, more conscious and thorough with our metrics. For example, with my company, what we're doing is, when it comes to the energy side, we're building this hydropower facilities on existing dams throughout the U.S., and generally in North America. And sometimes when we're looking at how much increased generation we're making in a plant, say we're making it more efficient and getting more megawatt hours, how do you connect that story to a local community to show them what the impact is?
Mm-hmm.
How do you personalize the numbers, essentially? And so that's something I've been thinking about largely in the past year or something with my job, nothing concretely, but I think going forward, just the position of where I am within the company and where we are at now, we've acquired more plants, we're looking more towards how can now we communicate this story of increased renewable energy generation to investors, to local community members, to get more buy-in, and then even to get people to apply to these jobs that we've been creating.
And I can speak to that too from where we sit in Durham. In the last 10 years, this community has been changing dramatically. We've seen a lot of gentrification. We've seen people move here. We've seen people and kind of the uptick in jobs here with the Research Triangle Park. But we're also seeing this cool organic clustering effect that startups are having in downtown Raleigh, downtown Durham, and in Chapel Hill and Carrboro. There are more than 200 just tech startups in downtown Durham now. So if we're thinking that on average a team is 2.6 people times 200 startups, those are jobs that are here, and they might shift around some, but we're seeing the economic impact spread through the local small businesses, even the ones that aren't necessarily startup related. So email clients and things like that, yes, the hosting companies are getting a lot more business, but we're also seeing things like the local bike shop getting more business as people move into the downtowns and buy homes and start renting and want to go have a beer on a Saturday night and all the other kinds of things that come along with increased foot traffic in a downtown that had not necessarily seen it for a while. So that's something that I'm interested in, kind of the macro community building that comes out of encouraging people to build sustainable, in the financial sense at least, businesses.
I have two things to say. In Kenya, we are trying to add more renewable energy to our grid, and the selling point is cheaper power means more businesses and lower costs for existing businesses and things like that. So the story is that cheaper power means more efficient businesses, or costs are lower, which means they can do more, vice versa, so on and so forth. But I had a question about infrastructure, and how do you ensure that the infrastructure that first of all, what infrastructure do you need to make sure that you do have a scene like what you have in Durham? But also, how do you make sure that the local people get involved and that it's not just people moving in who take advantage of what you've built? Because that is something that is happening here, and because startups are not as common as they are, say, in the States, a lot of people will move here, start a company, get the funding that they need, and the people who I feel would have benefited the most from starting a company and keeping the company here versus selling it or whatever and hiring most of the local people that they could versus shipping out jobs don't get a fair shake.
Yeah. Smitha, do you want to answer this first? Since you're directly involved in infrastructure and local jobs, and you started talking about your firm's impact there, and then I'll be happy to hop in too.
Absolutely. So actually, I'm going to pull from a different experience I had. I had started this water nonprofit called Awake, and we were building rainwater harvesting and generally water accessibility infrastructure throughout India. And I've been involved with this, started actually in middle school and have still been involved to this day. But the way we got involved with the project was that we found this positive externality where we built these water infrastructures in schools. We saw two things happening. One was more girls were coming to the school, and their parents were even telling them to come to the school to get access to water. And two, so it was twofold. People were getting access to water, and the second was that you were having.
Hello?
I guess, or just innovation was by interviewing people on the ground before we even came up with a fully thought out theory of change. And I think that's what it's all about. It's this idea of human-centered design or user-centered design that a lot of private sector companies have been using, trying to understand consumer feedback early on in the process, so that before you put down all the money up front, especially in infrastructure, it's a lot of upfront costs. Before you do that, you understand the problem, understand the local context, and can have a more culturally sensitive answer to the problem, which might, in my case, have a twofold solution rather than what we were coming in. We were just interested in having water facilities and trying to increase water accessibility throughout communities in India. And then understanding the problem that it was very much connected to this question of should I go to school for many girls or should I go and get water for my families. We came up with this kind of this program. And so, I mean, I think that was one example of a way that we had successfully brought in local community knowledge to our project. But I think, you know, with infrastructure, there's so many stakeholders involved, not just community members, but there's also, at least in the United States, where what I'm doing right now is there's so many non-power dams. There's 80,000 non-power dams in the United States, and only 3% are electrified. So there's a huge potential there to just add power to these existing dams, which have already changed the water flow and kind of done their damage, to be honest. But what we're trying to do is trying to bring together stakeholders, whether it be the Federal Energy Regulatory Commission, the U.S. Army Corps, and people like pension funds, endowments, people who don't necessarily even know about the opportunity in hydropower in the United States right now, bring these people all together to be a catalyst in this process. And I think that's what it's about for my company right now, is we're just in the position of being able to bring everyone together to the same table to push this hydropower platform forward.
Very interesting, and I can say that, you know, you raise a good question, Clara. Who gets access? Who gets included? How do you screen and all these other things? We've seen in the last couple of years that 70% of our applicants, we take 5 to 7 companies every 6 months in our accelerator program. 70% of our applicants in the last 3 classes have been from outside North Carolina. And yeah, we've been really interested to see that change from before, where only 30% were coming from outside. We see that there is the need, and Brad Feld writes about this in Startup Communities, that you really need to include anyone who wants to opt into your startup community, whether they're new to town, whether they've been there for forever, whether they have sort of standing or not, and you let them opt in at different levels. So if somebody wants to help set up an event for, say, women in entrepreneurship, or entrepreneurs who are focused on hydropower or green tech, clean tech, that if you're in a position to help introduce them to people and sort of see what they're capable of, you should do that. And try to be helpful before you make an ask of someone. And that's the philosophy we've adopted here, and in the process we've met some amazing people who have gone to invest a lot of their time, energy, and money in the scene. I can think of a couple of notable angel investors who were not born in North Carolina, hadn't worked in North Carolina ever, and sort of put down roots here, and in the process have made serious financial and personal contributions to how things happen around here. I don't want to name names, but there are people here who are doing that sort of thing.
I guess it's easier when everyone is American, and when you're coming back from also the point where everyone has the same, like you all know about startups, you all know about the startup culture, but I'm asking, say that if you do move into Kenya, the startup space, well, there are Kenyans, a lot of the big investments aren't going to them. So that's what I'm worried about, the power dynamic. I'm more worried about the power dynamic more than I'm worried about who takes part. I'm worried about the power dynamic, that it's going to become like a second thing that people don't own, like after colonialism and after everything. This is the second thing that you don't own and that you are locked out of because you don't have access to connections, blah, 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 blah. You don't know how to pitch, you don't know how to do all this. So I guess my question is, for markets like this, in Nairobi it's almost 50-50, which I think is a good thing, that there are 50% Kenyans and 50% people from wherever. But there are markets like in West Africa where they just don't know about the startup, like it's just coming in now because they've had wars, they don't have the infrastructure, nobody wanted to move there. How do you make sure that those people who need it the most, really, who need these businesses the most, who need this knowledge the most, are the people who benefit? Because it's great to say that everyone should be able to come in, but everyone is not coming in at the same level. That's my biggest question. How do you make sure is it some sort of affirmative action? Because if I was to take Kenyans to a West African country like this, they would totally dominate the sector just because of the advantage that they have. So how do you make sure that these people also have that? Yeah. How do you have a startup culture in a place that doesn't have one?
Yeah.
That involves local people.
How do you start a startup culture? How do you kind of get things cranking, get people motivated, or just even get things really started?
Yeah.
And you raised the great point about neocolonialism being a huge threat, and this idea, how voluntourism has become something that needs to be interrogated and understood for what it can do, what it can't do, what it's helping, what it's drastically hurting in terms of development and access to work. And the same thing, if you can think of, you might have heard the term vulture capital to describe overly opportunistic and manipulative venture capital work and venture capital deals. The kind of flippant answer would be, yeah, well, you need local capital in order to get things started. But it seems like there's an opportunity for people who are looking to make real upside in their deals to invest in up-and-coming East, West African, sub-Saharan Africa, other places that are genuinely cranking. I mean, look at the program, the government-sponsored program in Chile is doing some really interesting things to attract entrepreneurs and grow some at home, too, with $50,000 grants that they were making for people who committed to 2 years working on startups in Chile. I haven't done this, sorry?
No, I'm saying keep going,
Yeah, so that's something that I look at and say, like, okay, so this is clearly a government intervention, a policy change that's aimed at creating some momentum. And momentum is what attracts venture capitalists. In general, venture capitalists and investors like to move in sort of herds. If they see one person investing in an area and getting a return, then they're more likely to follow their lead. So if you get a thought leader of some kind to demonstrate the viability of a certain area or a certain market or a certain geography, then you have a better chance of attracting more of the same. So it becomes this very strange and almost uncrackable in some ways chicken and egg problem. You have to have investment to get investment. You have to have startups to breed more startups. So you need a first mover both from the entrepreneur side, and then you need a first mover from the investor side. And we were talking earlier about angels and the role that they play in a startup ecosystem to kind of hit between where people are able to bootstrap and where people get their first round of institutional capital, and how important they are to help entrepreneurs kind of up that funding ladder. It sounds like there would be a role for high net worth individuals or people who have really done well in your geography to start making those sorts of investments as a vote of confidence in their peers and in what the possibilities are in the markets there. Does that resonate with you in any way?
It does, and that space is being occupied by people by USAID and DFID. Mm-hmm. But because they are so focused on development, they're giving it to you as a grant versus giving it to VCs versus giving it to startups. Mm-hmm. So I guess it's just perfecting the method, like I told you, because it's such new territory and the risks are so different. It's just perfecting what the method is going to be.
Yep. Well, it sounds like that in some ways gives you a huge opportunity to break new ground there.
It does. It truly does, especially in those geographies where no one's ever thought they would have a startup culture.
Mm-hmm.
And well, I would just add that venture capital and private equity and even the big banks are just one way of getting money into these markets. And I think venture capital and impact investing firms do have a very great role to play in trying to push the boundaries on innovation and bringing access to capital markets to emerging markets and in the social sector. But I just think that in some way I have been idolizing them almost too much, and I think that there's such value in crowdsourcing, crowdfunding, what's going on with Kickstarter campaigns, even the way Calvert Foundation has now started this program where everyone can be an impact investor and get a return on your investment. They're really breaking down the barriers on who can be an impact investor or venture capitalist. Exactly what Elizabeth was saying about just kind of the increase in angel funding. So I just think trying to get other people to have a bigger role in the conversation, it's also by having some people have a less big of a role in the conversation.
Right. Yeah, you raised a great point about making space, Mitha. That's a great point you've brought up. Now, I also want to bring up another important point that we're about out of time for this conversation, but it sounds like we have a lot more to talk about. I'm not surprised that getting the four of us together, we couldn't necessarily solve the biggest problem that may be facing our generation, but I hope that we can continue the conversation among the four of us and anyone else who's interested in talking more about VC, PE, and connecting those two sort of tools to the greater good. So I'm going to end the broadcast now, but I'd welcome anyone to follow up with me at Lizzie at thestartupfactory.co or at Lizzie Hazeltine on Twitter. Do you all want to throw your contact info up too?
My email address is what we use for the teammates, which is clarawanjiku@gmail.com, which is WANJIKU@gmail.com. Clara Wanjiku.
Great. Smitha, do you want to share your contact info too?
Sure, you can contact me at smitha, SMITHA96 @gmail. I'm also on the teammates email list.
Great.
And my email is asha.arvindakshan@gmail.com. It's on the teammates distribution list, and I'm on Twitter at DCAsha.
Great. Well, thank you to you three for making time during your lunch break. I hope you have a lovely rest of your Tuesday, and I'll look forward to talking with you again soon.
Thank you.
Thank you.
Bye.